Back to another trading vids video on the S&P 500 micro e-mini futures. This one's going to be really quick. Market's about to open, and I just want to show that I think we are entering a point where we will see a pretty big move either today or Monday or in the near future. So again, this is the weekly chart. Each candlestick's 1 week on the micro e-mini S&P 500 futures. Notice based on this move, right? Well, let's see here. This candlestick right here, this was our initial move up. So I measured this move, and it gives me this 161.8% extension fib. And notice how it's been knocking at the doorstep of resistance. Okay, the fact that it even really got there from this move is pretty bullish. Okay, so initially I was thinking that this whole move was needing to be corrected, but if this is some type of extension, then this is going to be like a 5 swinger. Okay, it's going to be 1, 2, 3, 4, and 5, which I will go back later and find out how to count it in 3 and find out which leg was actually extended, but that's not important for this video. So right now we're going to go ahead and so from the weekly, we'll just take a look real quick at the daily. Zoom in on the initial breakout, or what I think might be a reversal, this move here, and you're looking at a B and a C that is subbed as one of 3 parts already. So here's 1, 2, 3, right? So A, B, C, and A, looking for B here, and then another 3 swings up for C, which added all together will be a 5 swing move. Because even if we corrected this move here, okay, and judging by the 200-day moving average, let's go on the weekly and look at the 200-day moving average. No, not the weekly. 4 hour? Yeah, 4 hour. Then this retracement would put us, judging by time, and maybe the 38.4, which even if it came down to there, I would consider still bullish if we got a bounce off that. Okay, now obviously if we go past it, we'd probably end up going past this 200-day moving average, and then we need to look for further downside. But luckily we have this move already implemented here. Okay, we have our top right here at 59.91, give or take a few points, and our low at 57.51. Okay, so this move here is what we're looking at. This is going to be our short-term strategy. So you can see our first move here, and it'll be, I'll go ahead and label this real quick. It would probably be a minuet degree here. And then this would be a C. Okay. Now, Let me just take one more measurement here. Let me expand this here. Yeah, I'm good with that. I'm looking at this retracement right here. This is still around the 61.8, so yeah, I can see this as two smaller degrees, A, B, C here, A, B, and a C. Yeah, that fits. Now let's measure this whole move, and we are directly on the 61.8. We bounced off that Friday, so this is our risk to reward right here. Perfect entry. And obviously you would want to move your stop losses up off this, but our target would be to retest the 6,000 area right here where we hit on 528. I'm not sure if that's Thursday morning or when yeah, early Thursday pre-market hours, somewhere around midnight till 2 o'clock in the morning. And then our low was then Friday at 8 a.m. So it looks like right when markets opened up there. I believe that's correct. No, that's not right. That's 8 p.m. Sorry. No, that can't be right. Markets will close at 4. Yeah. It's got to be morning. Okay, well, anyways, that was the 61.8 on Friday. Oh, there it says at noon. What does it say? It's not telling me. I can get this box up, not the other. Okay. Oh. Well, that's weird. Anyways, alright. So that low was on Friday. Oh, there it is now. Anyways. So we got our move up. So we're looking to break this 6,000 level, and we are in an uptrend. So if we do break that 6,000 level, then our targets to the upside will be as the following: 67 at 123.6, 6107 at 138.2, 6167 at 161.8%, and then at 6226 at 200%, and usually around the 200. Nope, not that 200%. Sorry, 6224 at 200%. And usually at the 200%, I start to say that trend, if it hasn't corrected already, it will. So at that time, when it starts to hit these targets, if indeed it does, look for a divergence on your MACD. And that will tell you that the move from April 7th will finally correct. Okay, so we got 30 minutes here till market opens. So let's see. Let's try to anticipate the move. I did a video just a second ago on the US dollar, Japanese yen, and I anticipated a gap up. So if we, let's go ahead, and if we get the gap up on this one too, let's see, maybe it tries to fake us out at the 61. Let's do that. Let's say it gaps up 61.8, hits a support line here, and then we come back to retrace this move about 61 or 51. Wait, let me get that measurement. Remove. Oops. Maybe like this. Probably won't do the 61. Probably hit the 50 just to fake us out because that's too obvious, right? Let's do that. And then maybe from there we can retest that 60,000 level. And then from there, I mean, we need to be looking for a breakout, right? But maybe it's a double top. And then if we look to go lower, this is pretty much you're going to be moving your stop loss up. So that's probably the lowest point at 58.49. If we break that, then we're going lower. So I'm going to write this one in red. If we break there, if we break, yeah. And then if we just retrace this 3 moves, which would be maybe to here. And then we would break up higher. So that one would be green. Okay. Well, good luck. I hope that helps. And if you have any questions, like I said, the email is posted at the end here. Good luck, and until next time.